It's Julian Gordon from the Multifamily Movement, aka Mr. Multifamily. And the number one question that I get from people is, Julian, are there any no money down programs that I can use in order to get into real estate? And my answer is yes. And so in today's video, I'm going to show you 10 no money down real estate plays that you can use to get in the game right now. All right. So before we go forward, make sure you subscribe to the channel, click the notifications button to make sure that you're notified when I drop new content and videos if you aren't in the game yet. And so with that, let's get into it. So the first no money down program that actually exists is a program called NACA. NACA brands itself as America's best mortgage program. It has no down payment, no closing costs, no fees, no requirement for perfect credit, and below market interest rates. And so NACA is really, really powerful if you are low income or don't have the credit score that you desire. The way NACA actually finances typically is they look at how much you've been paying on and in rent consistently over time, and then they add on how much you're able to show them over several months that you're able to save. So let's say you're paying about $1,200 per month in rent, and then you demonstrate over a 3-month period that you're, in addition to that $1,200, you're also able to save $300 additional dollars. NACA will typically finance you for about $1,500. Okay, now that's just a general equation. There's other factors that come into play, but that is typically how NACA finances. And so this is a great option for those of you who are low income, who have low credit scores, and still want to get in the game. In fact, I had a student recently close, Gloria recently closed on a property, a triplex in Philadelphia, using the NACA program. And so this is a real powerful program. I absolutely love it. It removes the excuse of I can't afford it and gives people a pathway to home ownership. Our next option is the VA loan. So for all of you veterans and service men and women who actually served the United States through the armed forces, you actually have access to what I actually believe is the number one loan in the United States, and that is the VA loan. The VA loan is 0% down, okay? And it is also eligible for those who have surviving spouses as well. Not kids, but surviving spouses. The other beautiful thing about a VA loan is that you can use it twice. I had several students who have used the VA loan twice. This is Gary, and he closed on this beautiful multifamily using his VA loan after going through my program. And so the VA loan is a really, really powerful tool. Of course, you have to have served in order to access this particular program, but it is a great tool to use in order to get financed and get started in real estate. Your next option, option number 3, is the USDA loan. And this is typically for people with low income in rural areas, all right? The government is fully aware that the income needed to acquire real estate in some rural places may not be there. And so they provided the USDA program in order to make sure that you could get financed if you live in a rural area. Now, a lot of the people that I serve don't necessarily live in those areas or desire to live in those areas, but if you happen to be someone who is out there, you can actually access a USDA loan, and that can be 0% down as well with very low interest rates. Now, for those of you who are in the medical field, there is the physician's loan. And the physician's loan is for those who are medical professionals who are restricted by high debt to income ratios. Obviously, going through medical school and these kinds of programs require a lot of debt in many cases, unless you got scholarships. And the lenders are fully aware of that. But they know that because of the field that you're in, because of the certainty of that field is growing, and the income that you'll generate over time, they are willing to give you very low down payment or no down payment programs to be able to access home ownership. Okay, so go ahead, if you are in the medical field, go ahead and ask your lender if they have a physician's loan that you can access to get in the game. Typically, your debt to income ratio has to be within a certain window for traditional loans, okay, and that window varies based on where we're at in the market cycle. But because of the high student debt of physicians and people in the medical field, they've created this exception to make sure that those who are making sure that we preserve our health, right, and keeping us healthy can actually get into home ownership and stay in the communities that they actually work in. The same is true for the Good Neighbor Next Door program. This is typically for firefighters, policemen and women, and teachers who are serving the community, right, and being paid by the government to do so. The Good Neighbor Next Door program is an excellent program. They give you deep discounts on specifically foreclosed homes, but also other homes may be available. And the Good Neighbor Next Door program is a good program to get started with if you serve in any of those capacities. All right. Now we're going to move into some more creative financing that does not necessarily require a specific profession like doctor or medical professional or firefighter or policeman or woman or a teacher or even serving in the Army. All right. And so I want to get into these as the next half of our top 10. Okay. The next one is actually you raising money. So if you actually have found a deal or have the skills to find real estate deals, you understand the game, you can actually attract capital to you and actually do so in such a way where there is no money out of your pocket. So let's say you found a duplex for $200,000 and the down payment as a rental unit is going to be 25% down, right? Which is $50,000. And so you actually raise that $50,000 from different people in your network, right? Now, rather than them just owning the home at 25%, you actually can get a 10 to 20% equity stake in that deal with no money out of your pocket because you were the one who found the deal. Most people don't want their money sitting in banks earning 0.03% interest. They want it to be working at a higher interest rate than that. And so if you found a deal that is that you've done the due diligence on, you've run the numbers, and you can show them that the cash on cash return is going to be 12%, then they may be willing to invest in that deal with you as partners, and you actually form an LLC where you now have a 20% equity stake in that deal because you were the one who found it. All right. So that is a powerful way to get in the game if you don't have any money to actually invest yourself. All right. Number 7 is seller financing. You may see signs where it says for sale by owner or seller financing offered. And in this capacity, we take the banks out of the equation. And so if you happen to have an established relationship with the seller, or you establish a relationship with the seller over time, then they may be willing to do seller financing. So for instance, many people are selling because they need that wad of cash in order to buy another property or to do something. But if you've established a relationship with the seller that is not concerned with liquidity, that does not need that money right here and right now, then you may enter an arrangement with them where you actually pay them a mortgage payment. Okay. Now that mortgage payment is typically going to be higher than the payment that you would have made to the bank if you could have financed it on your own, right? But again, there may not be the same closing costs and other fees that are associated with traditional financing. So you actually may be saving if you can cultivate that relationship with the seller. The seller is the one who is still bearing all of the risk, right? And so as a result, you may have a higher interest rate on this particular type of financing. But if you have the right relationship with the seller and the seller is not in any sort of urgency to have liquid capital at their disposal, and they're willing to take these monthly payments or mortgage payments to them directly, then this could be a great option for you, all right? The next option you have is lease to own. Lease to own. And so lease to own, the way it works is you've typically done it. So you've seen people do it with cars, right? So you lease a car for 3 years, and then at the end you have the option to own the car, right? You get to buy it outright. And so lease to own is a very powerful tool. So how that arrangement looks is and what the benefit for the seller is that the seller can, let's say we're talking about a $200,000 house, the seller can actually lock in their markup, which is what you're going to buy the house from them ultimately. So if it's $200,000, you may agree to pay $220,000, right, within a 3-year period. And now they've locked in a 10% growth on the value of that home. Now, to collect the down payment, right, meaning that you're not putting a large wad of money out of your pocket for a down payment, the seller may charge you additional rent. And that additional rent then over what you've been paying up until this point, that additional rent will actually go to your down payment over time. So let's just say that your down payment on this property is going to be 10% on $200,000. That's $20,000. And so instead of asking you for $20,000, the seller simply adds what? let's say $600 per month to your rent, right? So 600, right, times 12 months is $7,200 times 3 years. That's about $21,600, right? And so your down payment will have been paid over a 3 year period by adding that to your rent. So you weren't coming out of pocket with some large sum of money. Instead, you were actually almost forced to make small contribution to your down payment over time. And so if you happen to be in a situation where you're renting right now, and you find that your owner wants to sell that property for whatever reason, you've made that property home, you've been renting it for 10 years and you want to stay there, and the seller or your landlord is open to it, you can explore lease to own or lease to own as an option. It does not have to be the property that you are also living in at this moment in time. You can explore that in other places as well. But typically what I've seen is that it's worked where there's been somebody who's renting someplace for a long time. They've now made it home, and the seller wants to sell, and the seller and the tenant, because they've had a great relationship over this time period, the seller is open to selling it to the actual tenant. Okay, so that's a very powerful option for you. All right, and then you also have the BRRRR strategy. The BRRRR strategy is where you buy, rehab, rent, refinance, and repeat. And so this particular strategy is not necessarily no money down, okay? It is actually no money in. And so how it works is, let's say you buy a property for $100,000, right? And it needs a $100,000 rehab, but it will be worth $300,000. And once you're done, the ARV. And so you put in $200,000, you force the appreciation up to $300,000, and then from there, right, you refinance out, you get your $200,000 back. Now you have no money left in the deal, and then you rent that property out over time to pay off the mortgage. This is a very powerful strategy. It does take money up front to get in, to acquire the property and do the rehab. You can get a construction loan, but you will likely need some money, right, in order to acquire the property and actually make that down payment for the construction loan, right? But at the end of the day, if you do it right, if you found the right deals and you run your numbers right and you kept your construction costs on budget or under budget, then you'll be able to pull all of your money out of that deal, and then that will set you up to have a property with no money in. It's not no money down, but it is no money in. So the final option you have is actually wholesaling. And wholesaling is where you serve as the middleman or broker between a seller and a cash buyer. It's typically a cash buyer, all right? And so the way wholesaling works is you build relationships with owners and you find off-market deals. You find a seller who happens to be in distress and you get the contract on their property. So in this example, the wholesaler got this property under contract for $250,000. But they also have a network of buyers who are looking for investments, and they found a buyer who is willing to buy that property for $260,000, and therefore the wholesaler actually makes $10,000 on this transaction without ever coming out of their own pocket. Yes, did the wholesaler need to use their time to build these relationships and find these deals and perhaps pay for some software, some technology, some mailers, and some bandit signs? Yes. There was some money out of pocket to initiate this business, but at the end of the day, the goal is for the wholesaler to be able to get the contract and find a buyer who's willing to pay cash for it and then take the margin that is created. So anytime you're driving down the road and you see "We buy houses cash," that is typically a wholesaler. That is not actually someone who actually buys the houses cash. It is a wholesaler who is seeking to attract buyers who need to get liquid very fast, right? They call the number and say, "Hey, you buy my house," and the wholesaler says, "Yeah, I'll get it under contract." And while it is under contract, the wholesaler is now looking for buyers, cash buyers, to come in and acquire that property or take that, get that contract assigned to a new buyer at a higher price and then take the margin. So those are 10 plays that you can run to get into real estate with no money in, right? No money down and no money in. And so there's no excuses that you have anymore in order to not get in this game. There's always a way. There's always a way. And so I hope that you can run one of these plays and get in the game as soon as possible. Real estate's not going anywhere. They're not making any more land. As long as human beings are on the face of this earth, real estate is going to be here, and it's going to be more valuable than ever. So hopefully you can run one of these plays and get in the game as soon as you can. All right. My name is Julian Gordon, aka Mr. Multifamily. I hope this video has blessed you, and I wish you health and wealth.